Look at the global handover from last night. The US, finally, the winning streak comes to an end, posting its first loss in the last 5 days. The Dow fell 135 points or 0.5%. The S&P fell 0.3%. The Nasdaq fell 0.7%. Now, retail sales really increased in the US. If you look at the data in June, there's been a sharp uptick, but that isn't enough to motivate markets. Markets focused more on the jobless claims data, which came in worse than expected, and that's actually what sent the indices flying down lower. Futures tried to make up some of this lost ground, but were not really able to. Futures ended the day 91 points up or 0.3% for the Dow. S&P futures climbed 0.3%, and then Nasdaq futures climbed 0.6%. So that's how the US market did. Let's go down to Asia. Remember, China had 3.2% GDP growth, which was reported day before yesterday. Despite that, Chinese indices fell as much as 4% yesterday. But barring China, the rest of the indices seem to be doing quite well. So the Nikkei was up 0.29% in early trade. The Topix was up 0.13%. The Kospi was up 0.54%. The S&P ASX 200 in Australia was up 0.41%. And then the MSCI ex-Japan was up 0.13%. So Asia looking quite upbeat if you compare to China. Now, when we look at EU stocks finished in negative territory on Thursday. The Pan-European Stock 600 slid 0.46%. Here, travel and leisure were the major losers, 2% down. And your material stocks and construction stocks were the only ones bucking the trend. Something key which happened in Europe yesterday is the ECB, European Central Bank, equivalent to the US Fed, has said that interest rates will remain unchanged and that the coronavirus stimulus program will also remain unchanged. So markets should be quite upbeat about that, but that wasn't reflecting in the indices. Now, two commodity checks like we always do. Oil finally retreated yesterday, testing that $40 per barrel mark, because what happened is the OPEC and Russia said that they are now going to reduce the amount of production cuts that they have because they see demand gradually reviving in global economies. So on the back of this news, Brent crude fell 45 cents or 1% to $43, and WTI went 45 cents lower or 1.09% to $40.75 per barrel. So WTI looking a little weaker. But let's remember that countering this downward price movement is the fact that inventories have sharply fallen. So consumption is picking up and crude inventories have come down. So that offers pricing some cushion. Now, if you look at gold also, we kept on saying all of last week, it's firmly above 1800, it's firmly above 1800. Yesterday, that trend got reversed and gold fell below the critical support of 1800. The dollar strengthened, and that's the main reason what really drove gold to fall a little bit. And also the ECB keeping its monetary policy intact has invited some investors to book profits as far as gold is concerned. So spot gold fell just below 1800 to 1796 per ounce, and your gold future settled down 0.7% at just about $1,800 per ounce. So finally seeing a mild retracement in gold, but barely anything of mention compared to the rally that we've seen.